What's up, guys? Just waiting on our Instagram friends. As always, they're just a little bit slower than my YouTube and Facebook friends. Let's get it. All right. So with that being said, what's up, guys? Michael Manaskayan here. So this whole month I've been sharing. I'm trying to share as much. I'm trying to share literally everything I wish I knew when I was starting out in my investing journey. And honestly, it wasn't even what I wish I knew when I just started out. It was things that I wish I knew 2-3 years ago in my investing journey as well that have allowed me to scale so massively. And if you're not very familiar with me, it's your first time watching or whatever, and I've gone from $0 to $2 million of real estate right when I started within my first 2.5 years. The majority of that was house hacking and some small multifamily off-market deal finding. The big part of my journey has been the last 2.5 years, where I've gone from $2 million to over $22 million, leveraging exactly the blueprint that I try to share with as many people as possible, just to help you guys out, because I was literally there. I was also stuck. I understand that maybe the speed at which you are moving is not the speed at which you want to accomplish your goals. And that's why I've created Super Investors. It's literally that step-by-step. How do you scale and achieve your overall goal of financial freedom faster? Because ultimately, I know you have a bigger purpose in this life than working for someone else for the next 40 plus years to then have a few $1,000s maybe coming in each month to just scrimp off of. So the idea is, well, how can you get there quicker with more money by working harder now? And that's really what Super Investor is all about. For anyone who's not ready for that, if you're not ready to scale your portfolio, you're just starting out, I have a completely free community called Wealth Through Real Estate. And as part of this whole month, I'm doing a entirely free series breaking down some of the key things that I believe in when it comes to your path to financial freedom. And we're focusing on some core topics, some core things that I teach quite frequently, which are financial freedom, understanding what your path is going to look like, right? We're spending a lot of time breaking that down. Today, we're going to be focusing on budgeting, right? Your income and your expenses. I'm going to give you guys free access, absolutely free access for anyone who wants to take me up on it. Free access to my budget, net worth, and financial freedom tracker. It's all in Wealth Through Real Estate. We're going to talk about net worth tomorrow, and then more of how you track your progress to financial freedom, the real estate, stocks, and lending. And that'll basically wrap up this week. And then next week, we'll be moving into deal analysis. One of the things I think is the most fundamental when it comes to real estate. Just because you can buy a property does not mean that you should. Even if you can do it raising money using none of your own money, does not mean that you should buy a property, because if anything, that thing is not generating you income, or it's not generating you enough income, or it's even worse, losing you income. What that is doing is that is not only preventing you from achieving your financial freedom, that's an obstacle for it. It's also taking your time and bandwidth that could then be spent on financial freedom. That's kind of the big thing here, is that you should only be buying properties that are pushing you towards your goals and are worth it, not those that just because you can buy something does not mean that you should, creatively financed or not. Then we're going to go into the various ways that I like to get deals consistently, the least amount of work, least amount of cost, and I'm able to buy deals consistently, the types of deals that I want, the majority creatively financed, without me having to do all of the freaking work that comes with wholesaling, right? And I've wholesaled plenty of deals. It's not the thing for me. It does not help me become financially free. It's great when you're starting out. It's a good entry point when it comes to real estate investing. In theory, you can do it with low money, low risk. However, if you really want to scale it, that's not practical. You need to be spending money, right? You want to make more money, you got to spend more money, and people end up spending too much money because whatever. Then the property acquisition blueprint. Basically, what is the step-by-step process that I do? 15-ish steps every single time. If I want to close on a deal that's cash flowing, managed by my property management, asset management, bookkeeper, all these things, so that it's managed independent from me, the operations are done, all the way until the very beginning for when a lead hits my inbox, right? How do I even generate leads when it hits my inbox, and every single step in between? What does that process look like? Because that's literally the thing I wish I knew a couple years ago, because I don't know if you guys are like me, but as someone who understands the path to what I want is primarily through imperfect action without understanding my roadmap, I feel a lot better. I feel a lot more confident. I feel a lot more clarity when I do have a roadmap, when I do know what I can expect. I understand there's variability, things come up and all that, but the reality is it is easier when you can expect what's coming, right? At least for the most part. And that's what I'm really trying to share with that. Then capital raising. I buy all of my deals using none of my own money. The $20 million plus of real estate in the last 2.5 years have come through $5 million of other people's capital. Some of it is through private money lenders, some of it private money partners. So it just really depends on the context, right? Some of that's been recycled, like replacing one PML with another. So it's not all just to acquire that one deal. But nonetheless, I did not have $5 million. I don't have $5 million in cash sitting in a bank right now either. That can then just be deployed into buying more real estate. If you have that, that's sick. You can get your portfolio set up even quicker. But the majority of us maybe have $10, $50, $100,000. Maybe some have more. I mean, I've talked to plenty of people. I know lots of people have a lot more because they partner with me. But I understand that you're not going to be able to scale your way to the portfolio that you want to achieve financial freedom in the timeline that you want using only your own money. It's just impractical for the majority of people in our country, like in the world, but definitely in our country. And then wrapping it up with systems and operations. So with that being said, today is back to financial freedom, right? We're focusing on the monthly budget worksheet. And I really want to screen share some for you guys today because I want you guys to know these tools that are available for you so that you can actually go and grab a free copy. I'm making your life easier by sharing the things that I wish I had access to when I started. So I just dropped the link in both Instagram and YouTube, and I'm going to start screen sharing. All right, so go to window, boom. All right, so this is the budget and net worth and financial freedom tracker. I just combine it all into one for you guys to use. Throw myself in there. This is the instructions. Don't worry about this right now. We're not going to go deep into this right now, but basically you're going to be able to, there's some definitions of some of the key terms. I always recommend people have an emergency fund. You have some funds set aside, ready to go and available, right? Just in case something happens. This is real estate. Things happen and you should have some of your own funds available just in case. But more importantly, you should have emergency funds for your own personal life. Investing is one thing. Your own personal life, especially if you have a family, especially you got kids, you have obligations, you really need to have some money set aside for yourself and your family. I think the most important thing the majority can do is get their personal finances straight first before worrying about investing. The benefit of investing is that it primarily grows what you save. It can grow it to larger amounts, right? That's the point. Income minus expenses is your savings. We talked a lot about that yesterday, right? Very simple. I'll show you that on the spreadsheet, right? But before you start investing, looking for growth, I think you need to have an emergency fund set aside for your expenses. So a lot of stuff in here, a lot of how-to, all that stuff. I have a whole video on it. So for anyone who's not in wealth through real estate, absolutely free, drop the link. You can hop in, you go into the, how many people we have? 1,250 members. That's insane. That's like awesome. That's that many people I'm getting to help on their journey. Like I'm so grateful for that. Community, classroom, and then under financial freedom blueprint, just scroll down to resources and there's a video explaining how to use this. Plus there is there's the tracker. So you can grab yourself a free copy, right? So if that's all there is to it. So that's what I did. I just grabbed the copy and we're going to go to budget. So let's take a step back, right? I talked a lot. Ooh, that's too far back. I talked a lot yesterday about your savings is a very simple equation. I don't know why people overcomplicate it, but savings is quite literally your income minus your expenses are your savings. With your savings, you can then invest that capital. At a certain point or even early in your journey, you're going to learn how to raise money to buy real estate. Or if you want to scale, you're going to have to, unless you already have a lot of money. However, it is imperative that you get your personal finances straight first, in my opinion, before you start trying to invest and start getting into lots of investments, like lots of investments that can then become a little risky because it's a lot of investments. And if you cannot manage your personal finances, which you have total control over, it makes you more likely to have issues in your business finances. I don't have like a statistic or anything, but it seems pretty logical that if you cannot manage your personal finances where you have total control of your income and expenses, or at least tracking of it, and definitely your expenses, it's going to be that much harder for you to have control of your real estate investments because you haven't built that muscle yet. That's all right. So I'm not saying spend freaking 10 hours on this thing. I'm saying, well, actually, you might have to the first time, but it's really simple. Come in. What is your income? You make any side income, right? And then what are your deductions? So your income is your net income. Your gross, your total is what you actually make in theory. However, it's what you have left over after deductions, like federal taxes, state taxes, if you're, Social Security, Medicare, medical insurance, dental insurance through your employer, all those things. One thing you'll see here is I always put projected versus actual, because to me, it's a very fun exercise to put what you think you're getting, especially when it comes to expenses, and then looking back and seeing, okay, what am I actually getting? For income and deductions, it doesn't really matter if you just put your actual. That's all that really matters. However, it is very good for the expenses section because you'll probably get enlightened on exactly how much you're spending on certain categories that you may not have thought that would be the case. One thing you'll see here for deductions, like I've said before, I believe in investing in the stock market. I don't believe it's my path to financial freedom. Well, it hasn't been, because in 40 years, I'll have several $1 million from my stock market investments. And that's awesome. Tax-free, multiple millions of dollars because of passive investing in index funds. I love that. But it's a part of my total portfolio, and what has truly helped me, what has truly gotten me to financial freedom at 30, you just can't do that with stocks. What did it for me was real estate. And then not just real estate, but real estate using the super investor blueprint. Buying creatively financed deals, especially in a market like now where interest rates are still 6, 7, 8%, right? Especially if you're buying investment loans. I'm raising the money to buy my deal, so it's none of my own money. I'm not limited in my ability to save to be able to buy investments, and maximizing all of my investment returns through the co-living management strategy. Higher cash flow, higher appreciation, higher debt pay down, higher tax benefits, and even easier to raise capital, which is phenomenal. So that's the crux of my super investor blueprint, those three concepts. So that being said, income. Get your income straight. Understand what you're bringing in each month. That's the first thing, right? Who cares what your expenses are if your income is, you don't even know what you're bringing in. When you understand your income, then it's expenses. And if you need to start with expenses, go for it. But this is harder for most people to track than your income. You have a pay stub. You have income coming in some way. Very imperative to track it that way. All right. So let's get into the actual expenses. So once again, it's really good, in my opinion, to break out your projected and then put in your actual number. So projected is, what do you think you're spending on this thing, right? I think most people know what their rent is or what their mortgage is, right? It's like, oh, I'm paying this much for it. But then the actual, like, that might be in line. But certain other things, people are not very cognizant of. Or, oh, I think I'm paying $100 a month for insurance, when in reality, it's doubled over the last couple of years. You're now paying $200 a month, and you don't even know that, right? Like that might be the case now, but you haven't taken a time to audit your expenses. And the reason why this is so important is you need clarity on your money in, your money out, so then you know what you're saving. The biggest thing, especially, is focus a little less on the savings. That's nice. What's the worst is your income is less than your expenses. And that is where people end up in debt. And that is where compound interest becomes your biggest enemy, because now you're in debt paying 24, 25+% interest rate on expenses that you probably should not even be spending your money on, right? You'll audit that right here. Like, you'll see that. So up top, we have home. So it's like home and utilities, all that good stuff. Whether you're renting or you have a mortgage, whatever, I know you're knowledgeable enough to say, okay, my mortgage includes my insurance, so don't put it here. Got it. And then it's up to you ultimately what you determine as a need versus a want. I'll show you exactly why this is really helpful, because then that translates into this budget summary tab, which is this massive cheat code, all automated for you. So need and want, right? You determine what is a need versus what is a want. But if I was to make it very simple, well, I guess I do make it very simple. Needs versus wants, right? It's ultimately up to you, But think of needs as those that are necessary, something you literally need to get by. Think of things like housing, groceries, healthcare. I even include a car because you need to transport. Like if it's going to help you make money, like go to your job and all that, that's a need. You could put it as a want if you know you bought $100,000+ car, or a car that was you bought it not because of not necessarily for usage. You bought it for all the glitz and glamour. Maybe you deem that as a want, and I would understand why you would do that. But it's ultimately up to you what you determine as a need or want, because it's your life, it's your expenses. Personal finances are exactly that, personal. So there's that. Then transportation, right? Car payments, car insurance, gas for car, all that. You see, I set a lot of this as needs, but if you're paying $1,000 a month for a car that you probably did not need, but you really wanted the very expensive car, once again, up to you how you determine if that's a need or want. Your living expenses, this is the one that shocks the most people because they are not very cognizant of how much they are spending versus how much they think they are. But more so, this recreation one, I think, is where people get especially blindsided by. How much are you spending eating out versus what you think you're spending? This is the one where you don't realize, and I'm not saying I'm literally the last person to say scrimp and save for 40+ years so you can live with $1,000 a month of income or have $1 million in 40 years. What's the point of life if you're just living like that and just eating lentils all day? That is not at all what I agree with. However, it is also important for you to understand your income, your expenses, and that you're not getting into debt for unnecessary spending. That's one of those things, being cognizant. How much are you spending eating out? What about ordering in, right? A little bit. Well, actually, it's probably more expensive because of delivery. Concert, shows, whatever you're spending that's recreational, that's excessive than what you need, it's for you to add in here. That's why I leave so many other categories for you. I put some ideas, but it's up to you ultimately what you're spending your money on. The easiest way to do this, right? I don't even talk about like getting your transactions. The easiest way to do this is go to your credit card statements, go to your bank statements, just open them up online and just line item by line item by line item. What did you spend money on? What did you spend money on? It will tell you the description of what you spent and how much you spent, and you just add all that in here. You say, okay, actual for this month was, okay, equals I spent $11.50, and then I spent $12, and then I spent $50, and then whatever. You just add it all up in there, and then you have a rough idea of what your expenses are for that month. Cool? You only need to do this for a month or two to get an idea. Some months you have some really big expenses that are not normal, but that's why, just understand that that's not a normal expense for you. Recreation, any kids expenses, savings and investments. So I separate this, just as an FYI, I separate this from deductions, right? Like your 401k, your IRA, all that stuff. I separate that to here because this is money that is coming in. Then you get your net income after your deductions. Even though some of this is a deduction, I take it here under the expenses, but it's categorized differently. And you'll see what I'm talking about in the summary. So this is where if you're putting money towards an emergency fund, right? Your savings account, high yield savings account, Roth IRA, just a regular taxable stock brokerage, health savings account, 529 plan for your kids, all that good stuff, that goes in here. Any debts, if you're paying down debts, this is one of those most important things you want to overcome, is pay off your debts. And then I put real estate expenses because the majority of people I help are real estate investors. So maybe paying money for software and education and travel and all that, you need to understand that because that's part of your spending. And this will then just tell you what you projected, what your actual was, and then what the net difference was. So saying you spent 164 in reality than what you projected you would spend. This is where a lot of the magic happens. It summarizes everything for you. Your income minus your deductions, minus your expenses, minus your savings, right? This is telling you how much you have net left over each month. It makes sense that this number should be close to zero because this includes all your income minus your deductions, minus your expenses, and the majority should be in your savings somewhere. If you have a small amount, that's fine. You just need to put that money to work. It means that's more money you could use towards savings. Could you use that money towards expenses? I guess, but I would recommend putting more of that towards your savings. At least build your emergency fund until you have a couple months ready to go. This then breaks down simply your different budgeted categories. And so you can see what that looks like. And then your savings rate. It's one thing to understand your savings number, $5,000. Like this is your savings number, right? 1133 and this 192 are your savings number, because that is what you are. Let's see. Yep. So basically it's what are you not spending, right? Savings is what are you not spending? That's your savings number. But then it's good to understand, because someone who's saving $100 versus $1,000 versus $10,000, it's all different. It's all proportional to your income. In theory, you should definitely be saving a larger dollar amount. You should be saving a fairly consistent percentage as well. So what this is saying is, what are you not spending divided by your total income? That is your savings rate, right? The most aggressive people I know hover around 50, 60%. They're living off 40% of their income, usually living off one partner. Like if you're a married couple or splitting finances with a partner, usually you're living off one income. That's like extremely aggressive. When we did that, we were house hacking and this and that. Like we had much less expenses than the majority of people, because we were sacrificing by buying a 2-unit, living in one, essentially rent free. We already had paid off cars, like $3,000, $4,000 cars. We're not spending like crazy. But it's very important for you to understand your savings rate. And this is not a competition against anyone else. It's just for yourself. The goal is to increase that, so you know that you are saving some of your income. Ideally, I see the rule of thumb is like 10 to 20% is what you want to get to if you want to retire at a reasonable age. The more you do, the more aggressive it is. Or at minimum, if you're positive, at least your personal finances are straight. So then you can, when you're investing, you can also translate those skills to your real estate investing journey. And then so this breaks down your needs versus your wants as well. How much are you spending towards needs? How much are you spending towards wants? And then this is the projected versus actual as well. So that's the end of today's, is the budget and budget summary. We'll be going over net worth tomorrow and why that's a very important metric. And then your financial freedom progress, which is fed in through your budget summary. What are people wonder, what number should I hit for? I always hear 10,000, 100,000. They don't know what number to go for. This is based on your expenses. And this will quite literally tell you what your monthly goal is to cover your needs and wants, 2 times your needs and wants, and whatever your wealth legacy goal is. You put that amount in there. We'll tell you what the annual goal is for that. Do you want to spend around $5,000 a month? You'll need around $60,000 a year. And this will tell you what percentage you are on that path based on your current investments. So we'll be talking about that in the next 2 trainings. So that, y'all, if you want a copy, I already break all this stuff down in detail in Wealth Through Real Estate. If you want a copy of that, it's in my Instagram. It's kind of everywhere. I drop it in the chat. It's in the description. It's literally everywhere. If you don't know by now, I don't know what to say. 1,200, what is it? 1,253 other people got it. I want you to get it too. Go in a classroom, Financial Freedom Blueprint. It's all here. You can completely free download the budget and financial freedom tracker. And I have a free real estate investing calculator. You can grab that, tools and resources and trainings to just help you guys out in your journey. So with that, thank you. I appreciate you guys. You have a great rest of your day, and see you guys next time.